Hello, everyone, and welcome to this TT Live webinar on TT Pre-Trade Portfolio Risk. I'm Michael Riley with the TT Training and UX team in Singapore. Today, we're going to be covering what is TT Pre-Trade Portfolio Risk, what is the purpose of portfolio risk, and how does it work in TT. Then we'll get into some examples from a trader's perspective, looking at the workspace and how pre-trade portfolio risk would reflect on the workspace for the trader. Then we'll have a look at TT setup and how pre-trade portfolio risk can be configured by an admin. So what does TT Pre-Trade Portfolio Risk do? It is a risk management system which takes a holistic view of an account's portfolio and considers the potential offsets and diversification benefits leading to potentially lower margin requirements. This differs from traditional margin calculations, which are based upon individual positions and then added together. For example, we can consider a basic margin calculation where we might be long one contract of the S&P, and we are charged 16,000 USD for that position. Also, we would be short one NQ or NASDAQ futures where we're charged 24,000. In this case, basic margin being used is going to be a total of 40,000, so the 16 and the 24,000, when the individual legs are added up. However, this does not truly represent the risk of the entire portfolio, as these are somewhat correlated products. So with TT Pre-Trade Portfolio Risk, that correlation is taken into account that there is actually less risk here, and therefore less margin is required. So the purpose of portfolio risk here is really to reduce that margin usage. That's really the major takeaway here. So it allows you to more accurately reflect that risk, therefore allows you to maximize your capital efficiencies by giving you an overall reduction in the margin that is required. So where does pre-trade portfolio risk really come from here? So over the years, a number of risk models have been developed, such as SPAN, Prisma, VAR, etc. And our partners at KRM22 have taken these models into their risk engine to do the portfolio risk calculations. They receive risk array files on an intraday basis from the exchange to ensure the account is margined at the most up-to-date figures, and they determine where the reductions can be applied. Now, by considering various combinations of filled positions along with working orders, TT will determine the worst case margin applicable to a particular account and will reserve the correct amount of capital from the account's credit. Each new order is checked as part of the portfolio calculation during pre-trade risk, and if it is determined that the order has the potential to exceed the allowed credit, it will automatically be rejected. The rejection message includes the details, including the calculated margin requirement, the available balance on the account, and the type of portfolio check which exceeded the worst case margin. So, for example, as we can see here, TT pre-trade risk rejection, credit required for this order, 25,000, J Smith, the account in this case, exceeds account J Smith, span credit limit, 22,500, and the type of order was buy. Margin requirements in different currencies are first converted into the currency set on the account, which we'll get into in a moment, currency set on the account, and then compared to the allowed credit limit. Pre-trade portfolio risk integrates with other markets on TT that do not yet support the service. If a trader is accessing a variety of different exchanges whereby some support the service and others do not, the margin requirements for all markets will be added together and checked against the account's credit. Trade-out logic used in TT pre-trade portfolio risk differs from the traditional logic. In portfolio risk, credit forms an integral part of the trade-out calculation. Instead of simply considering the open position and allowing any order which reduces that position, pre-trade portfolio risk will make a calculation to check the resulting worst-case initial margin and options premium will not exceed the allowed credit limit. Consider the following example. A trader has 1,000 credit and is long two E-mini S&P 500 futures calendar spreads. So short two DEC 24s and long two March 25s. The initial margin requirement for this position is 440 US. The trader then attempts to buy two of the December 24 contract, looking to flatten the existing short position. Now, although the incoming buy order is reducing the trader's existing positions in the December 24 contract, the resulting initial margin requirement will be in excess of the trader's credit. So the worst case scenario is where the trader is filled on the buy orders, which would see an outright long position remaining, in this case, the S&P March 25 contracts. The initial margin requirement for this position would be 30,360. As the trader has a credit limit of 1,000, the buy order for the ES that 24-2 lot would be rejected. In cases where the account has exceeded its allowed credit limit, the trade-out logic used in pre-trade portfolio risk will allow orders where the resulting initial margin and options premium is equal to or less than the current amount and the new order does not cause an increase to the credit requirement. The risk calculations also account for TT order types and automated tools such as TT's auto spreader in their risk calculations. So in the case of an auto spreader order, it will account for potential hedge orders that may need to be sent as a result of fills for quote orders. So once the fill quote orders are come in, and those hedge orders then need to be sent. Also, as you can see here, the number of exchanges that pre-trade portfolio risk applies to is quite extensive, covering all regions around the globe in the Americas, APAC, and EMEA here. Okay, we're now going to switch over to a workspace to see how portfolio risk looks to the trader and what the difference looks like between the old margin calculation, where we're just adding up all the values, and the pre-trade portfolio risk. We're going to switch over to the workspace, which we can now see on screen here. And just so that everyone is aware, what we're looking at in this workspace is kind of a simplified view, but we have a market grid in the upper left where we have a number of instruments preloaded. So I have a couple of S&P outrights at the top of the list, followed by a number of options, the NASDAQ, crude oil, corn, and I think we have wheat down at the bottom there as well. Now, moving to the right, we have a description and then a number of price fields related to each instrument. But most notably, we have a bid and the ask here. And if I click on the bid or the ask, what appears is the order ticket, which is the widget that we can use to populate the quantity. So I can populate the quantity here on the left. And then I have the price field, which I can modify. I can then modify the account that I want this trade allocated to, the various order types that we have available to us in the time in force. And then once everything is configured, I can just click on the buy or the sell button, and then that is going to place that order on that particular account for us. So I click buy, and then we can see down in our order book that I have a working one lot at this particular price. From there, I can select that order and cancel it as well. In the middle here, we do have the positions widget. This is going to show us our activity for the session. So by default, we see the account, the exchange, the product, the specific contracts that we have activity in. So I have some buy and sell activity for crude oil and for the S&P Mini. We have a net position of 0, so I'm flat currently, and my P&L is negative 337.50. And if we get to the right side here, we can see the balance type, and the balance percent used. Also a margin column here. So just to kind of touch on what the previous view would look like, if I click on the ask here for the S&P, I can drop the price way down below the market, and then I'm going to change my account here to MRS. And this account is configured for kind of the old margin calculation. So as I click buy, we'll see that the positions widget now shows MRS, the MRS account. And if I filter down for just that account, we can see in the margin column, I'm being charged $16,000 for that one contract. My balance, which was initially $100,000, is now showing that I have $84,000 in disposable capital to continue to trade with. And then my balance type is showing P&L and margin, which means that the balance is reflecting any margin deduction. So I'm getting reduced my balance minus the $16,000 in margin, and it would also include any P&L. So if I had a negative P&L, it would also reduce my balance by that amount, or if it was positive, it would increase it by that amount. Now, the difference here is that we would be adding all those margin values up, and before we do any kind of an offset, I would like to point out that in the upper right, we also have a balances widget. Now, this is going to be the key point where we're able to observe the differences and the benefits of pre-trade portfolio risk. So in this widget, we have 3 columns. So we have previous settlement, current estimate, and change. The previous settlement is going to be the values updated by the broker or FCM as of the most recent upload. So whatever they last uploaded for those values. Current estimate will be calculated using current positions, working orders, and P&L. And then the change column is just going to show the difference between the values for the prior settlement and the current estimate. So current estimate column minus previous settlement will give you the value in the change column. Now, with regards to the fields here, the real key value here is going to be the liquidating value to start. So that is your account balance, again, loaded by your broker, your FCM. In this case, again, it's a $100,000 account. And as we kind of go down the list here, the total balance and the total equity, you'll notice, is the same as my P&L. As we buy and sell some of these option contracts that we have loaded. We'll see our long option value, short option value, and our net option value. And the initial margin required under the current estimate, that will be really the place that we go to see how much margin we're being charged for whatever the position is. Then as we have an offset, like the S&P and NQ positions, so for long one and short the other, we'll then be able to observe that reduction in margin versus the 40,000 that we mentioned before. Next field is going to be the maintenance margin required. Those values will coincide with the maintenance being slightly less, generally speaking. And then the margin excess is going to be 100,000, which is our balance. And then the current estimate, which in this case is that 100,000 minus the P&L, and then that value will drop as we incur more margin charges. Now, this widget is set to a specific account, in this case, the MR test account. We can see that at the top here. If I right-click on the widget, I can then select the particular account from any of the accounts that I have access to. Now, going back to the positions widget, a moment ago, we placed that buy order in the S&P. So I'm just going to do that again here, except we'll do it again with the offset. So MRS, we're going to go ahead and we're going to buy one in that account. Again, we can see that information then populate in the positions widget, margin showing 16,000 and our balance reduced to 84,000. Okay, now I'm also going to go to, let's see, the NQ position here, and sorry, I did not get filled there. Drive that higher. Market's moving rather quickly here. There we go. So we were working that order. We still got charged the margin. We are now filled, still charged the same amount of margin as we would expect. But now I'm going to go into the NQ June 25. I'm then going to sell this contract. There we go. So we can see that we are long one of the S&P, we're short one of the NASDAQ. And bear with me here. Didn't allocate that to our different account there, so we'll go ahead and correct that real quick. Okay, so in that MRS account with the old setup, we can see we were charged the $16,000 in margin for the S&P contract. We are short the NASDAQ. We were also charged $24,000 for that. And as we talked about in those slides earlier on, our total margin charge is $40,000. So a considerable amount, and our balance then reflecting the $100,000 minus the $40,000, as well as any difference in the P&L. So that's going to continue to tick around as the market moves around for us. Okay, now we're going to do the same thing, except we'll now do this with the MR test account, which is set, which is configured for the pre-trade portfolio risk. What I can do here is going to be the same thing. So we're going to buy one in this account, and we are going to, again, sell one of the NASDAQ contracts here. And as these orders go through, I can unfilter this here so we can see all of our positions here. So in MR test, we can now see we are long one of the ES June 25, short one of the NQ June 25s. Again, the same margin values will populate within the positions widget. However, this is not, well, this is also going to show invalid, indicating that we are actually configured for that portfolio risk. Now, when I go into my balances widget in the upper right here, under the current estimate, we come down and we can see that initial margin requirement for this particular setup is showing 16,000. So considerably less than the 40,000 that we see in the positions widget, specifically for the old setup there. And depending on how our account is charged, that is going to be the value that our future orders are going to be checked against. So currently, I actually have 83,000 in usable capital in this particular MR test account, and I can continue to deploy orders accordingly. Now, there is specifically an offset. I believe the normal charge for margin for the S&P is about $16,050 or so, but we have both the S&P and the NASDAQ contracts, the positions on. So I'm going to go ahead and reduce the position in that, in the MR test account. I'm going to exit this S&P contract. So I'm currently long, so we're going to drop this down here. We're going to sell out of that. And then as this, now we have gotten out of this offsetting position in a sense. So this is going to then increase our margin. I know that the NQ margin is considerably higher here. As the risk system, recalculates all of these portfolio risk values, what we're going to see here is that our initial margin is going to increase from that 16,000 to a higher value. I would note there is a kind of a calculated process that goes on, and then this value updates on our screen. There we go. So now we can see 24,420 is actually our initial margin requirement. That is for just having this short one NASDAQ position. So we no longer have that offsetting value. So now we're getting charged that full initial margin requirement of the 24,000. Go ahead and exit that as well. And I'm going to do the same on our other account here, just to avoid any kind of confusion. All right. Okay. So we flatten out, as we can see in the positions widget, we flattened out the positions, and now this is going to readjust in our balances widget. So now we're showing zero margin needed. Our P&L is about negative 665. So we can see these values do, they do line up. However, that margin is really the key takeaway here is that reduced margin. Now, the S&P is currently at 5807, kind of ticking around there. So what I can also do is if I go to the ES, the June 25, we're looking at a call option here at 5825. If I go ahead and buy that particular call, we're going to see the same kind of activity in our positions widget. So I've got, in this case, 5750 is the amount of margin charged. Now that's a fixed value that the brokers would set in TT. So any option, whether it's in the money, out of the money, way out of the money, they're still going to charge that same value. Now, within the balances widget, we're going to see a higher value in this case, showing 7,100. Again, that's calculated based off of values directly from the exchange, whereas the 5750 in the positions widget is just a hard-coded value set by a broker. So that order is currently working. I'm actually going to close that one out, and then let's go and do a covered call here. So I'm going to go ahead and buy one of the S&P. I'm going to I'm going to sell. Let's see here, we'll sell the call. Now, we saw a moment ago that the outright margin for the S&P was 16,000 or so, and then we had 7,000 for the call. What we'll see here is a considerably reduced, given the two-leg position here, obviously the outright and we're selling the call, we will see again that reduced margin value. So in this case, for the initial margin required, showing 16,060 here, and there we go. There's the reduction. It takes a moment, like I said, for that to calculate and be displayed. And now we can see that the initial margin required is only showing 13,000. So again, we're getting a $3,000 reduction in that margin value for that total position. Now, once again, if I exit one leg of this particular position, go ahead and buy out of that particular spread. Now we are left with that ES June 25 long one contract, and in a moment here, we'll see that updated initial margin going back up to $16,050 or $60 or so, as soon as that calculation takes place. Now I will note, as as that calculation is taking place, that does take a moment to update and then display. However, the risk checks do happen instantaneously. So if I'm still long this one lot here in the S&P, and I decide I'm going to go and buy a 10 lot, let's say a 20 lot, if I click buy, we are going to see an immediate reject. So that, the calculation takes place and then is displayed, but the more immediate is going to be the actual risk check here. In this case, getting us the reject for TT pre-trade risk rejection. Credit required for this order requires 337,000, exceeds the amount of credit here, in this case 100,000, and then the type, again, is a buy order. Okay. Just for one more here, we were looking at we bought the call a moment ago, and let's go ahead and do that again, actually. So as we buy that call, we're going to get charged about 7,000 on the initial margin. Give that a moment, and that will update again. And then what we'll take a look at is that if we do a call spread, so we'll sell the call spread. So we'll sell the 58.25, and then we'll buy the 6,000 call for the S&P. And again, we'll see that kind of reduction in margin here in just a moment. So currently long that one call, current margin showing 7,197. Now let's go ahead and sell two here, and then we will go up to 6,000, and we will go ahead and buy one of these. So we are short the 58.25. We are long the 6,000. Again, that's going to do the calculation, and then that's going to display our reduced margin for that particular position. So as that processes, there we go. So instead of going to 15,000 or so, we do get a slightly reduced margin, in this case showing 13,000 for that initial margin. So we do get some offsetting benefit there as well. Okay, so we're also going to take a look at the TT setup portion, how we configure the pre-trade portfolio risk on the accounts themselves, and what that looks like and how we go about doing that. So something for the admins here. In this case, we are looking at the setup portion of the platform. Across the top, we have Trade ADL Backtest Monitor and Setup. So when you log in from the Workspace launch page, or logging into trade.tt, at the Workspace launch page, clicking on Setup will bring you to this window here. In this case, we're going to have users' accounts, limits, connections, and so forth. So I'm looking at my users in this case. All the users will be featured in this list here. I've obviously got this filtered down just to myself. And then as we go over to the accounts, again, I would have all of the accounts listed here. I've got it filtered down to the three that are relevant that we were looking at a moment ago. And in this case, I'm looking at MR Test, and that is the account, as I mentioned, that was configured for the pre-trade portfolio risk. Now, MRS was the previous version, so we'll take a look at that first, and then we'll kind of go and walk through the differences here. So for MRS, all of these configurations are going to be done on the SOD credit tab. So as I select that particular tab, these are going to be the settings for this account related to start of date positions and credit checks. So as we scroll down a bit, we're going to go down to the credit settings section, and from here, there's a couple of things that need to be in place. So first is going to be the credit check. Now, regardless of whether you are using the rule for apply P&L, margin limit, or P&L and margin limit, or the pre-trade span margin, regardless of whichever one you're using, if you want the checks to take place, you will need to have this box checked. All right. So with that box checked, for the old version of margin calculation, apply P&L and margin for those trades that we placed before. Again, that would take the balance of 100,000, which we have down here in our daily limit field. So we had the 100,000, and then as we place more orders, we were then charged for the margin, and it was 100,000 minus whatever the amount of margin was, plus any negative P&L. So if I had negative P&L, that also would have been deducted from the initial balance, in this case the 100 grand, and then once I run out, I would then get a reject. Okay, so that is the old school way. If we go back to our other account, the MR Test account, this is the account that we used, we placed trades on a moment ago, and we were able to kind of witness the changes in the balances widget for the various margin calculations. So scrolling down to the same place, again, credit settings is going to be the area here. Check credit, we have that checked, so everything was going through the proper checks. We can see that the rule has already been set, so apply pre-trade span margin. So the rule is in place, and then the daily limit here is also showing 100 grand. Sorry, both of these also have the currency set to USD. Obviously, I can hit the drop down. I can change that to whichever currency I prefer if I need to use something else. Something to note here, my cursor has a red circle with an X through it, so I'm not able to modify this 100 grand in the daily limit field, and that is intentional. We'll scroll down and we'll have another field that will actually populate this particular value. But before we go down there, I would just like to point out that down below here, down below the actual balance, we have 100% of margin to be applied. So currently, we are placing orders, and those orders are being analyzed, and then the margin value is being applied to our balance. Now, we're not able to go in and modify those particular margin values when we're using the pre-trade span margin rule here. But if we would like to overall reduce the margin being used, we can certainly change that from 100 to say 50%, and then that would, that would be applied to the calculations that are done. So, so another additional feature that we have here with that pre-trade span margin. Now, with regards to the actual balance here in the daily limit, as we scroll down a little bit further, there is the cash balance section. Now, this is where we're going to see a number of fields that we saw in the balances widget. Most importantly, of course, is that liquidating value that we said was kind of the initial balance that we begin with. So again, 100,000 here. If I change that to 90,000, by the way, and I save that change, give that a second to save. Once that is in place, if I go back up, it does change the daily limit up here. So it's kind of odd that I couldn't change it there, but that's really just because we are changing it down in the liquidating value field. Now, as you can see, we've got a number of fields here that are just showing 0. So we have that long option value, short option value. So if your broker or FCM ever needs to populate those fields, they can certainly do so from here. And they can make those modifications, save the changes, and then that will dynamically update on your workspace in that positions widget. In fact, with that 90,000 in place there, if I pull this back up, pull up my workspace again, you'll see that the liquidating value is now showing 90,000. So again, it does dynamically update those values straight to the workspace. Now, in this case, we are setting and we are modifying that balance, that 100,000 to 90,000 or whatever the change needs to be. We're doing that on a single account, and that can get, that could be rather problematic if we have to do 1,000 accounts in multiple fields, right? So what we're able to do is we're able to actually do a file upload, so a CSV file upload, for example, in order to upload in mass, let's say numerous accounts all in one shot. So in order to do that, on the left side here, again, we have users, accounts, connections, and so forth. We have this company settings dropdown. So if we expand that, and we are an admin, if we expand that, we can go down to data uploads. And from here, we're going to have the ability to upload files in a CSV format that can then make all these updates for us. Now, in order to generate that file and so forth, that would probably be from some back office calculations that are done. But within, on the TT side, I would just note that if we go to tradingtechnologies.com, this is kind of our homepage here. If we go to resources and documentation, this is going to bring us to our rather extensive documentation. And if I go to, scroll down a little bit here, I can go to trade, which would be everything for the front end, ADL, which would be ADL related, and then setup here. And if I view the documentation for setup, we're going to have all kinds of information here, and we can get into accounts and SOD and uploads and so forth, or we can use the search at the top, and we can just search for file uploads. And this is going to take us to those to the file upload documentation here. In this case, we are going to be uploading what we specifically refer to as an account cash balance file. So this one right here. And as we go through here, we can kind of see all the steps, but what we're going to be essentially doing is selecting a upload file. So again, we're on data uploads, we are selecting a new file to upload. And then from select file type, we're going to have a number of different files that can be uploaded here. In this case, we're going to account cash balance. The type of file that we have generated is going to be a CSV file. And I can then go and choose the file. I have one on my desktop already here, so I'm going to select the account cash balances file .csv. I'm going to open that up here and click upload. Now, as that is, let's go on down here. So this is my current upload here. It's going to be at the bottom of the list. It's already a success. While that has completed, what I can pull up here is the actual file itself. So in this case, we have kind of a basic CSV format here. First, it's naming the account, and then we have a number of fields to the right. So within the documentation that I mentioned a moment ago, we can actually see the formatting here. It's one of the first things that's mentioned. So if I go to the CSV format, this is going to take us to kind of the layout of how we can upload any of these particular fields. So in this case, we have the account. Scroll down a tick here. The account, the SOD cash, the currency, collateral 1, collateral 2. So all of these different fields, again, most notably the liquidating value here. And then we have this little chart that has the different positions. So following this, this template here, I generated this file before we began. But what we can see is MR test is the account, position 3 is the currency, and then down here, liquidating value is in position 9. In this case, position 9 is over here. So 1, 2, 3, 4, 5, 6 is the new cash balance that we should expect since that upload was successful. So if we go back to data uploads, we can see that one was a success. And if I then go back to the accounts in the upper left, and I go to MR test, I can go to the SOD credit tab. As I scroll down, we can see in our daily limit that I'm now showing 1, 2, 3, 4, 5, 6. As I scroll further down, the liquidating value also showing 1, 2, 3, 4, 5, 6. Okay, so that concludes our presentation today. I hope you enjoyed. I hope this was beneficial for everyone. Certainly, if there are any questions, feel free to reach out to us. The training team's distribution here, global distribution, is going to be at training-ux@tradingtechnologies.com. And feel free to reach out with any questions. And if we don't have the answers, we'll certainly try and connect you to the person that does and get you that information. Thanks again for joining, and have a good day.